Down here at the bottom in the rolling options record keeper, if I was starting a new trade, what I would do is I would just duplicate this sheet, and this gives me a copy, and say I want to take a position in a stock. Let's take a look at Apple. I have this open right now. We're looking at the Apple chart. We're looking at what we think might happen. What we can do is we can say here, the valuation is high, it's F valuation, but it is a profitable company. Its momentum is quite good. It's definitely in a bullish trend, but I may not want to buy this for $219. I may think that this might drop down. Let's look at the expected range of Apple and see if we can put on some sort of trade. I'll show you how my rolling options record keeper works. If we were to look out, like say a month, I'm looking down at this level, this 193. I'm looking at the expected move in Apple and saying, okay, well, Apple was trading down here around 207. I think it's going to stay above 210. We're going to see some continued bullishness in this. What kind of trade can I put on that makes some money above this 210 level, which seems like a decent level that I might want to buy at? I don't mind going long if Apple trades above 210. If I want to take a very basic strategy, this is options AI. You can just look at bullish strategies. A credit put spread might be something that you might consider. My rolling options record keeper gives us way more choices than that. So first of all, what I would do is I would just type in Apple, put it in all caps. What that's going to do is it's automatically going to pull the share price. Then I'm going to put in my transaction date today, and it just fills down the column. So my underlying price right now is going to be $219.88, which is the current price. This cell D7 is always going to update with the current price. I'm just recording it as if I was opening the trade today. Now I can record any sort of notes, or typically the 52-week implied volatility rank. It gets recorded in this cell, but really this is row 10 is just made for notes. So we can put whatever notes we want in there. Number of shares owned, if I have some, I would be able to chart it in the profit loss chart if I was to put this down here. For example, I could just put in 100 shares. And even if I did this for a zero credit, you would see that this is what my profit loss chart would look like if I owned 100 shares. So we can include the shares or not in the rolling options record keeper. I'm going to take those out for now. And now, what strategies do I typically take? So here's the list of strategies that are fairly typical for me to take. We've got really basic strategies like a 1-1-1. We've got a Batman, which is like a complex iron condor trade. We've got a Batman with unlimited loss, which is kind of a complex ratio spread based on a strangle. We've got a big lizard, which is a bullish trade to the upside, similar to a jade lizard, but with the short puts at the same strikes. We've got a butterfly. We can do puts or calls, broken wing or unbroken, depending on what we want. We could just do a simple buy stocks and write the covered call against it. We could do a call butterfly. We could do a call calendar, call spread. Call spread is one of the things that we see on options AI. If we look over here, call spread, it's pretty typical. So if I wanted to enter one of those, I would just choose that from the drop down. What my record keeper does is it actually, when I choose the call spread, it highlights the positions that I need to put in. We're selling a short call and we're buying a long call. We have an expiration date. So it automatically highlights the cells that are required to complete the strategy. And it does this with all of these different strategies. So if you're learning strategies and you're trying to figure out, like, what could I do? I'm bullish on Apple. I don't want to buy if it's too low, but I want to put it, but I know the volatility is low. I might want to take like a humpback trade. Well, what is that? A humpback is a pretty simple trade. It's a short put, it's a short call with a near-term expiration, and it's got a later expiration date with a long call. Let's take a look at IBKR and see if we can set up a humpback trade that would allow us to potentially profit, and how it charts out here in the rolling options record keeper. These are the type of trades that I might put on. We're gonna look at Apple. Typically with these types of trades, I'm going out about 45 days. The volatility is low, so what I'm saying is I don't mind buying Apple if it was to drop below 210. So I'm gonna sell the 210 put. That is going to give me a credit of $300. The profit profile on this is a flat line. Very, very simple trading style. If Apple stays above 210, I collect this $300 and I get to keep it at expiration on August 16th if Apple is above 210. If I wanted to make this a slightly more complex trade, and I thought that Apple was actually going to go up, what I could do is I could sell the 235. Now, this is a strategy that most people should recognize if you're an options trader. It's one of the basic neutral strategies where we have a short put and a short call, 67% probability of profit. And so this is called a short strangle, where we're selling a naked put, we're selling a naked call. We have no stock position in this. If I want to turn this into a humpback, what I could do is I could go out to a later date. I could say, go out to January, and I could buy a call above this. And what this does is it creates a profit profile that is slightly more bullish in nature, because what I'm creating in here is a diagonal. I've got the August 16th 235 call that's short, and I've got to buy the January 17th 250 call. This creates a diagonal spread. Without the short put in there, this is what the position looks like. It's looking for a bullish move to the upside, but it does have risk to the upside as well if Apple was to go up too much. So it's a relatively neutral trade with a profit spike very specifically at August 16th around the 235. Why might we put that on? Well, let's go over to Options AI and take a look at where that is. Let's look at the 3-month chart. And the August 16th, 233.25. This is the potential expected move. So when we look at the profitability range of that humpback and we look at where the expected move is, it should correlate to what the market is actually pricing in. In this case, we have $206 to the downside, $233 to the upside. So let's take a look at that humpback position and see where those break-evens are. Break even on this trade just by itself, the diagonal is 216, 246. So it's relatively high in comparison to that range. It's a very bullish trade. By adding that short put in back on the August 16th date, by selling that 210 put, we're creating a flatter profit profile. We're bringing this break even down to the downside, and we're bringing the break even on the put side down. So now we have break evens between 208 and 253. Let's take a look at where that is on Options AI. So 208 would be like right here, and then 253 is going to be off this chart. You know, it's going to be up here somewhere. This is 220, 240, 253. It'll be approximately here. That's the profitable range. And I like these types of trades when I expect some sort of IV expansion. I might do this. You'll notice in Options AI, one thing that I haven't mentioned is that there's a little bit of a blip here in the expansion of the projected cone price-wise. This means we're going to have earnings coming up. Typically, if I'm doing this type of trade, I wouldn't do a trade that includes a diagonal to be held over earnings, because my short option is going to decay very quickly. My long option is going to have some decay as well. The primary moneymaker in a diagonal in the long term is the actual value of the long position. So I don't play them typically through earnings. I might play it up to earnings. From a standpoint of like what trades do I often trade, it really depends on IV, but in low IV, I am playing quite a few like call calendars, diagonals. I don't play a ton of double diagonals. That's not really something that I do. I have been playing some, like a Marauder would be a good one because it has a diagonal. Poor man's covered calls are always good if we're bullish. Lots of butterflies right now, just because we're in such low IV. If there was an IV expansion event, I want to have limited loss. So put butterflies, call butterflies. A Rampart is also another good one. It includes a diagonal. Not playing a ton of the unicorns right now. The IV has actually dropped so much that they're not that great. We're just not getting enough on the short duration puts and calls. Unicorn's a call trade. We're not getting enough on the short duration theta to warrant having a unicorn trade on. Haven't been playing the Vikings at all. Call zebras, I definitely am loving call zebras right now. If I'm bullish on a stock, this is like one of my go-to trades rather than buying stock. Now I've been stock trading for almost 30 years and I am holding less and less stocks. If I want a bullish position, I just take a call zebra. So that is kind of how I'm functioning in general right now.